Well, if you look at the median report, the economy is very stable. And so when we're going to cut the rate cuts is really just dependent on when we cut the rate cuts. And so how we deliberately bring down inflation on a consistent basis on a risk adjusted premium. And so, we're going to cut it when we cut it. Thank you. Right? The whole day. I was like, yo, when are we going to see inflation down at 5.1%? When we see inflation down at 5.1%, I'm like, oh my God, somebody should make this dude a fucking Fed chairman or something. This guy's a genius. Give him a Nobel Prize. This guy will be like, well, Jerome Powell, you mentioned that in Q4, we're going to start to see inflation move down and you have a target of 5.1%. So why do you have the target of 5.1%? Because we do, right? So we have the target of 5.1% because we have a target of 5.1%. So if we have a target of 5.1%, then of course, we have a target of 5.1%. And he's looking at them like they're stupid. And I'm just like, bro, hold on. We'll get to it when we get to it. But at some point, he was answering like this. Somebody'd be like, well, Jerome Powell, you're the smartest man in the economy right now, and you basically have the whole world on your shoulders, and all the responsibility is on you. So what do you think is going to happen? And he's just sitting there like, oh, well, to be completely frank with you, your guess is as good as mine. Wow, fucking this guy is gonna save our lives. I'm so glad that the whole world's financial system rests on this guy because he's so effective and making me feel good about them having control over this. What's the Fed's protection against runaway inflation if you keep rates high, but inflation keeps going? He's like, well, if inflation keeps going, then what's going to happen is that inflation is going to keep going, and then we're going to have to do something. Am I dyslexic? Right. So I have to, when I'm listening to this shit, I have to sit there and think about it. Is it me? Right? Am I the problem? Right? He put me through this whole self-reflection period. I'm sitting there like, either I'm a complete moron or this guy's not saying anything. And so I went back and read the transcript. He didn't say shit, not one thing. He'd be like, well, remember we talked yesterday, their target for the Fed funds rate by the end of this year is 5.1%. And so very obvious, if we're at 5.5 and you want to go down to 5.1, we're assuming two rate cuts at 25 basis points a pop. So they're like, why two? And why 25 basis points? And why 5.1%? And he's like, that's a great question, ain't it? Next person. Wait, go back and answer that question, Jerome. And so that's basically what it was watching Jerome Powell yesterday. Long story short, very dovish meaning that they're going to be soft on monetary policy, not as aggressive, which is good for the economy. More money getting pumped in, easier monetary policy, typically is stimulative to the economy because when you inject liquidity into the banks, when you help the Fed get more money by essentially buying bonds or through these treasury operations between the Fed, then you allow individuals and businesses to get money either directly through the treasury or through borrowing from the banks. And the Fed can inject liquidity into the banks and lower interest rates, which can stimulate the economy by incentivizing more borrowing, which really is the root driver of production in America. It's debt, right? So businesses borrowing to grow their businesses, to hire, to do R&D, to buy equipment. And so that whole movement of capital and that liquidity in the market is what creates a stimulative environment. So loose monetary policy or dovish is typically bullish for the stock markets because people have a higher risk tolerance when the economy has more liquidity and when market conditions are a bit more active. You got me? So people are going to be buying stocks. I'm bullish on the economy personally, and I'm bullish on markets. I think between the CPI report that we got yesterday, which completely beat expectations, 3.3%, incredible. Jerome Powell's dovish meeting, and then today, this PPI print, we had the producer price index drop about an hour and a half ago. Not only did we go flat on the core PPI, which excludes food and energy, which are volatile sectors of the economy. Also, food is subsidized by the government through a lot of the farming subsidies, and energy too volatile of an instrument because gas prices are always changing and kind of messes up the numbers. But the core or the headline producer price index number came out negative, meaning that prices came down for once. We haven't had a negative print since January. This would be for the December numbers. Since then, we've had a 0.3% growth month over month, 0.6% growth month over month, 0.2, 0.5. And now we finally have a decline in producer price index inflation. Now, that could be for two reasons. Number one, the input costs that producers are paying are coming down, which could show a loosening of the supply chain constraints that we've been seeing because of the wars. Supply chains get fucked. Everybody has to pay more. It's more expensive to move goods around the world. And that's typically why we see prices go up during times of geopolitical instability. I'm on a roll, people. Click the link in the description if you find this valuable to learn the NASDAQ 100 strategy. All right. So looking at the general outlook, it could either be supply chain costs coming down, and that's why producers are paying less, or it could be demand. If demand is slowing down, they got to bring prices down for the material goods. The PPI number is going to come out negative. So this is either a slowdown in the economy, and that's why producers aren't buying as much stuff, and that's why costs have started to come down a bit, or supply chain constraints are starting to ease. Excuse me. Supply chain constraints are starting to ease, and that's what's leading to a lot of the the reduced pricing. So we'll go through this here at the end of the stream and see where the declines really were. We kind of have the total numbers here. I might just feed this to ChatGPT and kind of get a quick answer. So I'll let you guys know what that looks like. I did create a report here for the CPI print that dropped yesterday that we never really went through and show you where the biggest increases were. So we'll talk about shelter costs, energy prices, and then we'll take a look at shelter, energy, and all the 12-month changes. Who had the biggest changes over the last 12? Cool. Awesome stuff. All right, if you were on the live stream yesterday, we did take a trade together. Let me see if I can bring back all of my markups. I didn't lose them. Okay, so this was the trade from the live streams yesterday. Market never came down to hit my entry. It was very, very close, but close only counts in horseshoes and hand grenades, not in trading. You understand? You have to be effective, you have to be accurate, and you just have to be accurate, okay? So beautiful trade yesterday. It really doesn't get better than this, except it does get better is when it comes down and hits the zone. It is what it is. So target one got hit perfectly. This was last night during Asia session. And then target two didn't get hit until this morning. Then we had a beautiful reset, and that's how we got to where we are right now. So I'm going to go ahead and erase a lot of these markups from yesterday. Go ahead and focus on today's price action. All right, here's the new. This is what we were just looking at right when we started the stream. I just had to remark this to get all my old setups back as well. All the trades that we've been tracking this time. Never got that retest at the FOMC meeting or right before the FOMC meeting in the morning. And then we were looking for that pullback after the meeting. Never got the full pullback. That one hurt. This retest happened over London. I wasn't even London. This was pre-New York, 6 in the morning. And so really, I'm just looking for a pullback to that low so that we can keep the party rolling. Cool. Makes sense. This clear for everybody. All right, quick pullback. We should be good to go. Now for the VIP members, well, this one's for everybody, but for the VIP members, this is really what I'd like to see. You guys get where I'm looking at? All right, below this liquidity, one more pull below into that zone, and you guys know exactly what I'm looking at. So you can go down to your, actually you can even do it on the 30-minute on your chart just to find that zone specifically. And just layer those on top of each other. But the reality is we have support that got formed here. Now support that's getting formed here at these wicks. And so as it keeps forming, we have floor, floor, floor. We talked about Elliott waves for a little bit. And I told you guys to count the waves to see if you're at the end of the 5-wave. You have 0, 1, 2, 3, 4, and then 5. Wherever 5 lands, then you have the retracement. So we're really just waiting for this next impulse. And then I want to see the correction back down. If the market just keeps climbing like it did yesterday, all right, no retest of the lows, just straight push. It is what it is. Let it go. All right, we have our model 1 and 2. Our model 1 right here, and then we have model 3 down here. We got zones for days. We're lined up. We're lined up. Let's see if we get a rejection at this level. Okay, good stuff. Make sure to drop a like and subscribe if you haven't already. It takes 2 seconds to drop a like. Pretty Peaches, welcome. If this is your first time here, great day, Roy. Howdy, peeps. Rich, good morning. I speak Spanglish. Let's get it. Good morning, Biggie Smalls. Yahya, welcome, welcome. Good morning, David. Did the dot plot change? Good question, David. Let's check out the dot plot here in a second. Good morning, Pops. How you doing? And who's ready for the NAS Masterclass tomorrow? Tomorrow is officially June 14th. Today is the last day to register for the NAS 100 Masterclass. Use promo code FOMC25. That code's still active until tonight, till midnight tonight. Get 25% off your seat to the NASDAQ Masterclass. This strategy works. Guys, we're on stream number 259. Okay, that's 259 hours of us trading this strategy. You got enough here to make a good decision. All right, so invest in yourself, invest in your trading future, and make sure that you guys get on the winning team ASAP. Don't put your success off for later. There is no later. Later, interest dies down. Later, the food gets cold. Later, people don't care. Later, you get busy. Emergencies happen. There is no later. You got to make a real decision here. Given all the bullish data that came out, why is US 30 tanking? If I pull this up, C4, and US 30 is in a retracement and it's not actually tanking, I strike one. What do you think I'm going to find when I pull up US 30, C4? Help me out here. Can we do an Elliott Wave review session for the VIPs? Yes. And Chris, I'll do you one better. As a VIP member, you have access to all of our content. So if you go to the Forex textbook, which Omer and I wrote back in 2020, in the last section, it's section 4 under the professionals. So you have section 1 is intro, then intermediate, expert, professional. Head down to the professional section. You have this guide right here. Click the 3 dots. Elliott waves, section 4.13. Oh. It's a little bunky sometimes. You just got to scroll a bit further down. Elliott wave patterns. So this kind of breaks down the basics, which is like the Elliott wave starts. Wave 2 has to be higher than wave 0. Wave 3's got to be higher than wave 1. It's a higher high, then a higher low. And so it's pretty easy to see, visualize. And then you also have the full explanation here of the actual rules that need to be met in order for it to be a valid Elliott wave. So what Elliott waves come in series of threes, fives, and sevens, but most of the time it's typically fives. Okay, this is the one I want you guys to focus on the most, which is the market cycles and Wyckoff. This actually explains most of how I trade and most of how I see markets. So when I talk about analyzing markets, when I talk about the model that we trade, discounts and premiums, supply and demand, every single thing, accumulation, all of it really comes from an understanding of Wyckoff price cycles, where there's an area of accumulation where the market's oversold, and then demand ends up becoming greater than supply, and that's where price goes up. Then a market becomes overbought when it hits a premium. Then you have a distribution area, and then you have a move down when supply is now greater than demand. You understand this, you understand the model that we trade, the three-step, and you understand how to analyze markets. Okay? We go through these examples of the accumulation, markup, distribution, markdown. Here's the full schematic with all the different phases of the anatomy. Okay, so you can go through the phase A, B, C, and D. So every consolidation range has an anatomy. And so I don't bore you guys with this stuff because you really don't need any of this shit to make money. At the end, like once I learned all this stuff and all these thousands of concepts, I reduced it down to what works and what do I really need in order to make money. Okay, so I eliminated the different phases, I eliminated the points, and really all I care about is the original support. I care about the spring through the zone. I care about the test, and then I care about the lower high or the higher low, excuse me, in the range. All right, so focus on this stuff. Here's a distribution model for you with the full anatomy as well. Harmonics, this is way back in the day, but you know, this is the sauce right here. Oof, 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 oof. All right, not gonna give away too much, but yes, Chris, we'll do it for sure this Saturday. All right, see what happened with gold. Super secret magnet indicator not strong enough. We had a great push all the way up to 23.42 from the original entry. And now we're coming back in for a retracement. As long as we create a higher floor, this thing's going to continue to push. I expect gold to come back down to these lows at 2,300 and then create a new higher low for the move up. Ooh, US 30 looks like the best buying opportunity of all time right now. All right, we're going naked chart, people. We're going naked chart. Did we close below the low or not? I'm going to find the body of the lows here on the 5-minute. And bear with me here. I'm getting surgical. This is surgery right here. 30-minute. Reset the chart. We did not close below the low. We did not close below the low. That's insane. We did close below the 88.6 though. Oh yeah, that's a solid entry. 2.8 to 1 R if it gets up to TP2. The TP1 snag a 1.5 to 1. If you wait till,
Nasdaq's coming down here.
it's is it at the entry? So just real quick on
It
US
is very close.
on US 30, if you wait until it gets above the 886, you're basically getting a 1-to-1 R. If you catch it down here with a lower risk, you can get a 1.5 to 1 R. And if it goes to TP2, you're looking at a damn near a 3 to 1 R. All right, so just throwing that out there for everybody on this US 30. We did fill this wick, which is typically a bearish sign, but as long as we're staying at these lows and as long as all this bullish news is out, I don't really see a reason for markets to crash. So I'll take the bet on NASDAQ here. Thank you guys for the heads up here. This ain't looking too hot, but never really does look too good, does it? So tester entry comes in right here. All right, let me enter this trade here. Account. So trade is in for NASDAQ. Tester entries in. I'm putting the trade in on my account. There we go. All right, let's see if we get that rejection. Let's see where TP 1, 2, 3 are. So TP1 is going to be right here at 19,608 on the Oanda chart. So right, pretty close to the top of the range. TP2 is going to be kind of expecting the wick fill, and then TP3 is going to be back up at this wick high. But I have these higher time frame targets. This thing is looking pretty bearish just based on this massive wick. So we really could keep bleeding from here. But let's see if we at least get a rejection to TP1. I might just take the full trade off the table. We get that rejection here. Oof, if we get that rejection, big if. Yeah, this ain't looking too hot. This ain't looking too hot at all. Might have to just cut this thing. I'm gonna give it a second to see if we at least get a rejection. I'm not gonna jump too soon, but based on my instinct, I'm gonna let you guys know this thing's probably gonna crash through. But I accepted the risk when I took the trade. I made sure that I put appropriate risk for that tester entry in case it does blow through. So now it's just about letting the trade play out. But yeah, this massive wick right here on the higher time frames, creating this lower high where all the bodies are closing below, not the most inspiring sign. This is where patience comes in. If you trust your system, you at least got to give it time. Once the market closes below support, then you know the trade is no longer valid. But until then, you got to give it a chance to pop back above. This is where greatness happens. All right, we're coming back to entry slightly, almost back in break even. It's what we do. It's what we live for, people. You got to test yourself, and trading is only ever as easy as your mindset. So if you're having a great mindset day, you're pretty sharp. You accept the risk. You understand the probability nature and the uncertain nature of trading. You accept the risk that you're participating in. Okay. First, you assess it and then you accept it. You know how much you're losing, or you know how much you're putting on the table, and you accept that that could be a possibility. Then trading is pretty straightforward. It's pretty easy, win or lose. Trading gets harder when you're not really all the way focused, not really all the way there, not really having a good emotional control day, and it starts to play in on your decision making, and that happens. So make sure you guys prioritize like being in that performance mindset while you're trading, because that really is the make or break. So you can have the best system, you can have the best risk management. Risk management really is your defense against everything. Because even if you're having a bad day, if you keep your risk in check and it's a small loss, then it's not consequential to your bottom line. You guys get me? So make sure you focus on the mindset. Performance is one of the most important things, and then risk management too. Um, yeah, this ain't looking too hot. I might just wait for one push back up to entry and then close this thing out. And the reason I'll close it out is because we have a clear. Actually, let me see if there's a break right here. Is this technically a break? Kind of. It is. So I guess this is model one. This would be model two. This little bugger right here, which is exactly where we're at. 886 to the break. Ain't that nuts? So that's model two, and then model three is down here. And look, 61 right at the top of this previous consolidation. How does it get better than this? How does it get better than this? TP1 is right at that previous area of consolidation. TP2 is right here at the previous lows of today's Asia session. And then TP3 is going to be right up here at this wick. Yeah, we got target zones for days on the way up. I'm going to keep shaving 10% off all the way through. Or I'm going to close the whole thing at TP1. It is what it is. All right. If you're not feeling this trade, you do have a chance here. We're still sitting pretty close to entry. Market's kind of playing around. If you want to jump, now's your chance before it moves. I'm personally going to accept the risk on this one. If it doesn't work out, I got two more options, or really one more option for the day, which is all the way down here, close to yesterday's session's lows. US 30 rejecting back up. We'll see. You got to trust yourself. You got to trust the system. Did anyone jump out? Anyone hop out of the trade? Yes, Roy, if I'm correct, it looks like the forecast only 1/4 point cut by the end of 2024. Let's see. We'll do CME Fed watch. 48 days until the next Fed meeting. That puts us not in July. That's damn near August. There's no Fed meeting in August. Oh, July 31st. Damn. I don't remember it being that. So the likelihood of keeping interest rates the same in July, so no rate cuts in July, but they're expecting rate cuts. The market is now pricing in a rate cut, 60% probability of a rate cut in the September meeting, another 50% chance of a rate cut, or sorry, 27% chance of another rate cut in the November meeting, and then a 20% chance of another rate cut. Okay, so they're not looking too slim. I'm thinking one, maybe two. All right. I'm thinking one, maybe two rate cuts, and like they're really hoping for the September rate cut. That's kind of what the market is betting on. So the more the market keeps betting on the September cut and it doesn't happen, that's where people get sad. That's where the market start to unwind. November meeting, there's about a 50-50 chance that they keep it the same, right? Or if they haven't cut rates in September, then they're going to be cutting rates in November. And a 45% chance of a rate cut in the December meeting. So really, really, they're banking on September and December rate cuts. That's two. That puts us at the 4.5, 4 3/4, or sorry, 4 3/4 of 5 range. Jerome Powell said that he has a target of 5.1, which will kind of be in between these. So it's going to be like 1.5 rate cuts. I don't know how the hell that would work. Yeah, this thing's probably going to continue to hit SL. But I have the second trade lined up. So what I'm going to do is I'm going to put an alert right below my stop loss, so I get alerted when the market breaks. And I want to have an alert back inside this range, so I know when the market's on the way. And I want to have an alert at my entry, so I know when I need to execute. The stop loss just get hit. It did. But just like usual, tester entry gets hit, take a small loss, re-enter the trade at the better zone, make the money back. It's it's the name of the game. Go ahead and put an X right here at this entry. David said I cut the trade. Good stuff. Well, that was quick. All right. Oh my God. All right. Time for a quick cleanup. Time for a quick cleanup right here. Gotta leave that one on. All right. Here's the trade. You don't really need a stop loss lower because if it does come through and fill this wick, then it's going to keep going to the next zones. And we were really going for that third touch, break of the lows. So yeah, nice retracement through and then continuation back up. That could work. If this thing wicks back above support, I'll take an entry here. I'll take another entry here. That would just be evil. Any questions, comments, concerns so far? That's how we looking. There's about 80 people watching. Drop a like, guys. There's only 23 likes. As much as I love LeBron James, I love Michael Jordan. Let's get this up to 24 likes real quick for Kobe, and then let's run it up to 78 likes for fuck, I don't know any players with 78. Let's get it to Larry Bird. I don't fucking know. 44. Who fucking knows? Drop a like, people. That's all I'm gonna ask. See this, let's get this retracement down to 19,475. What a gap on the futures. That is not the same chart. Yeah, so over here would be 19 490. That doesn't make any sense.
Roy, I
What up?
also have that gap on my chart on the mini Dow.
Hmm.
Would you advise us to wait until that gap gets filled so we can get a buy or
Yes. So towards the
right?
bottom of the gap is typically where markets will create support if they do. So the market will come back and fill the wick, go through, or sorry, fill the gap, go through, and then as soon as it starts to create support at the bottom of the gap, if it creates the higher low here, that's typically where you want to trade to clear the gap back up. So wait for it to break through it, to go under the bottom of the gap, and then come back above. I'm trying to find another chart so I can see. Let me see if I can do NQ. Um, Let me see. Oh my God. Give me another. Let me see if I can do NDQ. But this is CFD. Oh, let me try NQM. Oh, this is from the CME. This is the same one. Oh, huh. So no gap on this one. It's just a little bit late. Oh, 490. What? These people are crazy, dude. Come on. Ouch. How y'all feeling about this? Who's feeling the re-entry here in the chats? Walter, I like the NQM. I'm keeping that one. MNQ1, I'm doing that. Chris said I'm confused about it. I'm not really confused because it looks like a clear rejection back up. It's just about risk because we already had push up, push down. We're clearing back above the support here. This could either be a retest wick for the push down, or if it comes back above support and closes above support, then we can get a 15-minute retest, maybe 5 minute. Like if it closes above these wicks and then comes back and retest the zone for a higher low, that'll be the entry. But if we wait too long, it could just come back and close halfway in the range and then just keep going up and not give us a chance. So maybe tester entry right now, another tester entry. Let's see the RR on this. That's a 3-to-1. We're still sitting below the support. So as of right now, the trade's still not valid. But that's essentially what the trade would look like. 3-to-1.
If you go down to the 1 minute and do the breaker entry, that really just rejected the 886 there on the breaker.
You're talking about this breaker?
Yeah, the one you drew earlier.
He said the 1 minute. Didn't I roast somebody yesterday for the 1 minute? Mike, was that you? Oh, that was 2 days ago. I talked about the whole it's a gateway drug. You see what happened? Mike brought over some of that 5 minute to my house, right? And now all of a sudden, on a Thursday morning, me and Jensen are doing 1 minute charts, you know, live in front of humans. This is crazy. It's the gateway drug, people. Stay off the 5 minutes, man. They used to tell you, oh, bro, there's nothing wrong with it. Oh, Roy's a square. That's what they used to say. All right, Jensen, here's the break right here. Um, mm, 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 mm. Ain't that something? I mean, we're above that. We're above it now, but still not clear enough. We gotta close back above the Asia session support, which is doing now. Oh God. I'll do it for the R&R, to be honest. Because the longer that we wait, if the market gets up here, I'll have to accept the 2-to-1 if I want to take the trade. If I take the trade below the zone right here, we can get a 3-to-1 or better. So I'm going to put in another tester, guys. It's going to be my last trade for today. Well, actually, tester was 25% of my total order. I'll do another 25% here. And that way, if the market does crash and I lose that trade, I would have lost 0.5%, and I'll still have 0.5% left of ammo for this last trade. All right, so let me just pause my screen real quick, go ahead and enter that trade on my account. It is pretty risky, guys. We just had a pretty big drop here. So if you want to be more selective with your trades, and this is kind of a priority for you, maybe this isn't the one for you. All right, maybe you want to wait for that lower entry, 19,470. And they'll give you exactly what you're looking for in terms of that high probability trade that you can really feel comfortable putting your money behind. This one's obviously a bit riskier, but I'm going to take the chance because my risk management strategy is pretty straightforward. If I'm risking a quarter of my position on these testers and I lose 2 of them, it's not like I lost 2 trades. It's like I lost half a trade. And I always save my ammo for the big trade that comes in. Because what I used to do is burn up all my ammo. And then by the time the good trade showed up, I wouldn't have anything left. I'd either have hit my maximum loss for the day or, got margin called or even blown an account. So what I do now is I'm very selective with my risk and I risk small. And sometimes what ends up happening is you catch incredible trades like we did earlier this week, but it's only with a tester entry and not a full position, which is fine. We still get a 4-to-1 or a 3-to-1 from those trades. All right, so mitigating risk, very important. And having a good, clear risk management system will protect you even from all the losing days. Mike, you're still on the 1 minute. No. We got it off. We fixed it. Joshua, please, for the love of God, check your email inbox. How do I join the VIP group chat? Joshua Salins, apparently we've been emailing you for weeks and you're just ghost and you keep emailing us and messaging us. How do I get in? How do I get in? 77 like Luca. The Rochelle Marie. I like that. Yeah, Josh, apparently you've been telling my team you can't get in, you can't get in. And we're like, bro, the door's right here. Please, Josh, answer your phone. Like, we're trying to help you in. And you're like, they won't let me in. They won't let me in. It's like the guy that's like drowning at the pool and he's panicking. We're like, Josh, stand up. Josh, just stand up. It's a 2-foot pool. Fuck. Help us help you. Help us help you, Josh. We broke the previous day's lows on US 30. Are we still good? To be honest, no. These things are definitely coming in for a deep retracement because here's what I'm realizing right now. When you're at the end of an aggressive bullish cycle like this, where we had this consolidation and then we're just ripping, right? 0, 1, 2, 3, 4, 5. At the end of that 5 wave, basically when you're at the end of a big impulsive cycle, that's typically where retracements come in, much needed retracements. And so what I used to do is I would make a lot of money on the buy sides, chasing. And then I would end up giving a lot of it back in that big correction that came in. And so what I try to deliberately do now is when I'm in these situations, is all the money that I've been making on the buy side, I have to protect, okay? Especially if the market's going to come in for a big correction. So the 2 trades or the 1 trade I lost today and the other trade that I'm currently in that's not looking too hot, half risk. That's what it was. What just happened? People? What just happened to my screen? Yo, this ain't cool. Does anyone know how to fix this? How the hell am I so zoomed in? I can't even see my controls. I can't even see the panels. This looks like one of these just open up a new screen situations. There we go. Yeah, we're gone. Moment of truth. I'm gonna take this off. This is giving me the bad juju. I used to have some really superstitious friends that were traders, man. Some really superstitious friends. They wouldn't hang out with me if I was on a losing day. They said, I don't hang out with red MT4s. I was like, bro, we're boys. Like, I've known you since we were 3. They're like, yeah, you got a red MT4, get that shit away from me. I was like, but fam, I just drove you here. Like, I was your ride. It's like, yeah, I don't care. Hold control and scroll the wheel out. SA Capital Analysis, thank you. The restart tab. Caitlin, appreciate that. Josh says, thanks, guys. My bad, I'll check my spam. Josh, we're trying to help you, man. I got in with a tester entry, but on S&P. All right, different instrument, but you know, different instrument. US 30 still valid. What's talking about?
I went farther left on my US 30 chart, Roy, and there's a pretty good low that the 886 just got rejected off of. So I just took longs on US 30.
US 30 looks really, really good. Like that is the prime entry. That's about as good as it's gonna get.
I got lucky. I snagged right at the bottom of that wick.
We gotta think about like look at mini model right here. Okay. So you got like this little mini phase 1 being so you want to target these levels. If it's having trouble breaking this little thing right here, dude, it's gonna use it as resistance and then drop. So at least we're gonna get that pop up. Everything after this is gonna be up to how the market reacts. Damn, nah, I sound like Jerome Powell. If it breaks, it breaks. If it doesn't, it doesn't. Truth is, that's really how markets work. But the only thing we can control is the quality of the entry, and that one is rock solid, and so is this NASDAQ entry. Said facts. Red MT4 is contagious. Bro, yes, winning is contagious and losing is contagious. We all know people who are quote unquote bad luck. Like there's attract bad luck. They're constantly getting themselves in some fucked up situation. Oh, I lost my phone again and my keys in my wallet somewhere, and God knows what. It's contagious. But so is winning. You get around people who have good winning habits, which is, yes, I'm tired. Yes, we're about to go have fun. Yes, we're going to do this thing. But obviously, we're going to get this stuff done first. Obviously, I have to send this proposal first before we go. Obviously, I'm not going to put this off till tomorrow because I have 125 things to do every single day. And I'm going to chip away about 10 to 12 of them today. And if I don't get these extra 2, 3 things done, those are going to add up to tomorrow where 10 new things will land on my desk. We all have shit, people. We all got 150 things we got to be doing, right? Every day, just chip away at 5, 6, 7, 8 of them. And the way to do that is when you're getting around winners, when you're getting around people who are productive, they prioritize getting those done before doing all the other BS. All right, not to say that spending time with friends and relaxing and some of those enjoyable activities aren't very important for productivity, but at the same time, the most productive thing you can do is to be fucking productive, get stuff done. That's how we roll. I get in my feelings when the trade plays out and regret not going full risk. Well, it's all fun and games thinking that until the market reverses. Then you're like, oh, I'm a genius. Thank God I didn't go heavier, right? The reason I started using the tester entry is because I realized that I would get more emotional when the market would leave without me because I closed the trade early or I made a stupid decision. I would get more emotional that way than if the market went against my position and I lost. So I realized I'm fine losing small. I don't actually care about losing. And some of you guys, it's a personality difference. So you actually might feel more of an emotional response by actually losing a trade than by watching a trade go without you. So you have to know yourself. And I realized that I was making mistakes because I was breaking my rules because I would watch trades go without me and I would start to chase it. I would start to enter high. I would start to look for like 5-minute, 1-minute retests. So that's the priority, people. Number one, you got to know yourself, tailor your strategy to yourself. And the tester entry, look at this. If I lose small, I don't care at all. And I'm willing to take a small loss because I know I'm going to make it back because my strategy has a pretty good win rate and a pretty good risk and reward. If a trade goes without me, I'm probably inclined to break my rules. So I put in a tester, and that's what That's what it really does. Whenever at the very beginning, the problem I faced was I would always have that thought, right? I would always be thinking to myself, I should have gone bigger. And then that would lead to more problems because then I would just chase the market. Instead of being happy with a 3-1, I wanted to just get more and more out of it because it was never enough. That's where the understanding of get more money, get more capital. Stop trying to churn the strategy. Don't churn the markets, meaning forcing trades in order to try and create some activity in your account. Don't do that. Right? If you get more capital and you're still trading 3-1s, you're going to make a shit ton of money. Except instead of risking $300 to make 900, now you're risking $3,000 to make 9,000, and all of a sudden you don't really feel that FOMO anymore. You understand? So that's my take. This thing's not looking too hot. This is not looking too hot. But we'll give it a chance. Here's what I'm going to start doing. If you guys follow us on YouTube, you guys know that we can post like actual regular posts on YouTube. So what I'm going to do is I'm going to post the before and afters of every day's live stream trades to show you guys how they worked. Because if we just look at this on an average day, if we look at this on an average day, this is Tuesday, perfect. We're doing pretty well in terms of calling out the right trades.
Projections. I see 15 the 9.
Okay, so this was the trade from yesterday. And if we look at the live chart, this was it right here on the 15-minute, I believe. So you guys can see we had this consolidation. I want a price to come down to about 19,400. And then we had target 1 and 2. Target 2 was at 19,650. Target 1 is at 19,600. So market never really came down to that 19,400 zone. It was pretty freaking close, but we did end up going up to hit the first target at 19,600. Okay, and then the second target at 19,650, which was right here. Okay. So the trade played out, didn't really come back to our entry zone. So that's one of those where sometimes the market will leave without you. It is what it is. But I'm going to start posting the befores and after on those posts. Let me know if that's a good idea. And if you guys see those static posts that we put up, just drop a quick like or a comment. It would mean the world to us, and it would just show us that, okay, people value that information. I had to learn how to scale in trades, add to it while it's moving to target. I never add to a trade that's moving towards my target. That I would consider chasing or momentum trading, and you don't really want to be doing that because that's how you get caught in retracements. You want to buy at discounted areas. My current win rate is under 70%. It's actually under 65%. It's like about 62 right now. But that's way more than I need to be profitable. And to be honest, if I stopped taking these little tester trades, my win rate would be a lot higher. But the overall profitability is higher than it was when my win rate was at 75 or 80%. Because now I understand risk to reward. I understand my job is not to be in a trade or to catch a sniper entry or any of that stuff. The reason for the sniper entry, the reason I just took this re-entry is because the risk and reward is going to be way higher catching, a trade below the zone. So like, for example, if somebody entered right at this second, you would get a 3.6 to 1 R. For every 1,000 you're risking, you'll be making 3,700. And my current entry, it's about a 2.9. So the difference between $3,700 and $2,900 is the patience of the entry or the attention to detail or the attention to accuracy. Okay, so that's really where most of my improvements have been coming from. The 62% win rate doesn't seem that impressive, but when you take into consideration a win rate that's above, or an R that's above 1.5 to 1, that's where you realize where the profitability really is. Do you believe in quarter points on index pairs? To be honest, I'd have to look into it, but I did use it for a while and they were very valid. So you gotta think, here's why quarter points and higher time frame zones of interest work, is because institutions are trading on dailies and monthlies, and they're really looking at discounted prices to buy. And so when you're looking at the chart on the daily, you notice how when you zoom out, the numbers start to get a lot more even. You get 21, 22, 23, 24, 25. And so they're really just looking at these like whole numbers, and they're looking at quarter numbers in between those whole numbers. And that's why those zones typically seem to be a pretty effective place to look for targets, or a pretty effective place to look for, you know, uh, just market action, a market rejection, or a potential re-entry, or any of those. You guys want to hear something funny as shit? We were trying to clip up a bunch of those short clips from the streams, and I had the team send over a bunch of examples, and it was me talking about God knows what, right? And it was like 4 clips in a row, and I was like, dude, what, like 2 of these are unbelievably valuable because I'm just talking about central bank policy and global impact of central banking. But then the other one will be like, I don't even want to say this stuff. So, long story short, getting my act together. I'm still gonna be fucking around all day, every day, but we're gonna have segments. Today we had a pretty good structure. We kind of covered yesterday's news and the impact. I did clown Jerome Powell a little bit. That's always fun to do, even though he's doing a great job. His inability to answer questions is hilarious. Same with all bureaucrats and politicians, right? If they don't want to answer questions, that's what Saturday Night Live does, right? That shit's fucking hilarious. At least it was before they went woke. All right. Anyways, I'll have some more updates for you guys tomorrow. I'll be flying to Puerto Rico. If anyone here is in Puerto Rico, I would love to see you guys. While I'm out there, I'll be there until Tuesday doing some things. Keep that on the low. We just announced a brand new speaker for the FX Summit, and we'll be announcing 3 more speakers this week. Just to remind you, the top 10 crypto exchanges are coming to speak at the FX Summit this year. How did you get the top 10 crypto exchanges to come to an FX conference? It's because we all have the same interest in, number one, identifying the trend of where the future of markets are going, where the future of trading is going, where the future of technology and exchanges and financial regulation is going. We're all figuring this out together. So my job was really to put together an event, and shout out to the team. We have this vision to give the most holistic perspective possible on what is happening in markets, in financial technology, and the tools that we use, so that everybody here can be the most informed trader possible and make all the right decisions. How do we avoid getting into a lot of these issues that we've seen with brokers and prop firms and things like that? Is by constantly elevating the conversation, by getting more and more reputable names over time who have a 30,000-foot view on the industry, who has all the data about where traders are putting their money, where investors are putting their money, holders versus, traders, on-chain versus off-chain activity, on exchange versus off exchange, the amount of traders that entered the market. Who has all this data? It's the top exchanges in the world. Who has all this data for the Forex space? It's really the top brokers, the Awandas, Forex.coms, Avas, Saxos, but it's also the market makers and liquidity providers that are the provisional liquidity for probably 20 to 30 of the largest brokerage houses, right? So the clearing houses and the LPs and not LPs as in limited partners, the liquidity providers and market makers, they have aggregated data. And that's who we want to bring on stage. Give everyone the full view. Hear it from Umar. Hear it from, ideally an ICT. I'm going to get ICT at the conference, but also hear it from the top brokers in the world, and also hear it from the top exchanges in the world, and see where the money is going. I've always been saying hashtag FTM, hashtag follow the money. That's exactly what we're doing. Am I hiring for the team? No, we're not currently hiring, but we do work on projects. And so if anyone here is great with graphics, design, marketing, or have, video editing skills, or you feel like you could take our channel to the next level just through some simple changes of improved content, better branding, better posts, and you feel like you could be an addition, send us your work. We would love to see what you guys got, and we'd obviously love to work from someone inside our community as opposed to going out here and working with random third-party contractors and stuff. So let us know. Email us at info@chartaddictsfx.com. And for those of you guys that can't afford to come out to the summit, I highly recommend you invest in the masterclass tomorrow. Learn how to trade, get a funded account, make thousands of dollars per month leading up to the conference, and use that money to bring your family and yourself, or yourself by, alone, to the summit, so that you can come and get around the best traders in the world, have conversations with people like all the folks in the VIP group chat here, and people who are like-minded with a similar interest that are just as hungry, maybe not as hungry, depending on who you are, but just as hungry, just as motivated, and all have the same objective, right? Get this money situation figured out, understand how the game works, and understand how to take advantage of it so that we can all build something great together and not have to worry about money. That's the dream. All right. So make sure to check out both of those links in the description. Discounted tickets until July 1st. Make sure to grab those for the FX Summit. And if you have not grabbed your seat to the NAS 100 Masterclass, make sure to do so below. Use code FOMC25. How quick is it to get a payout from a funded account? Depends on the platform. Some of them are very quick, within 2 to 5 days. Some of them you can request same day payouts now. It doesn't mean that your payout gets approved the same day, but it does mean that it's probably 3 to 4 days before you get your payout. And some others, depending on if they're having issues or not, could take as long as 2-3 weeks. Right? I waited close to 3 weeks once for FTMO to send a payout, and then they were just asking for a ton of KYC information and the rest. This is obviously before all the issues with U.S. clients and regulation and whatnot. Brokers, I've waited God knows how long, right? A lot of the beef that I have with some of these brokers, it comes from having to wait for the payouts. But Apex, Top Step, they've been doing really well. Has anyone here waited more than 5 days for an Apex payout? Take it easy, Romy. Let me know if we can book a podcast together, Roman. Let's get that thing done. Max said I got some 88.6 boy skill. Yeah, you do. I'm waiting for the lower entry. Good stuff. Good for you guys. FOMC 25. That's the code. I mean, EU sells up 80 pips. Bryant Henderson Jr. EU. Wow. The disrespect. I'm looking at this area here for shorts. But that's the thing about U30. If this is a 50% correction, then you got a very good chance of breaking the lows here, Bryant. This is 50%. No, it's not. Is it 71? That'd be valid too. 71%. Oh my God. The 71 for EU is like the 78.6 for gold. And it's like the 886 for NAS. You understand? 71 is like that. TPs, you get 50%, and then TP. No, sorry. That 0.2. So that 0.27. That's pretty good. So you're actually expected to see a bit of a retracement here, which makes sense. You're at a massive buying level. So you could see a correction back inside the range. If it creates a lower high, then you got a very good shot of this thing continuing. If I'm lucky, I get this move up to these highs before the party keeps going. But that's just wishful thinking. Great, great, great catch, Bryant. Honestly, great catch. NAS is actually looking a lot better on the higher time frames. It's looking great on the 4-hour. All right, where we had a lot of slowdown. We had this big wick rejection, massive bearish correction, but we're starting to see this 4-hour wick rejection happening. Obviously, we're only halfway through the 4-hour candle, so there's another 2 hours if the market wants to keep dropping or if the market wants to push. I think sellers will end up winning the day, if I'll just be completely honest. I think sellers will end up winning the day, and the market might just end up getting stuck down here. Right, so we might see a rejection and a nice little rejection from here, but the market might just end up chilling here. Okay, so if I have to take a 50-50 coin toss and say, is this going to be more of a bearish day or a bullish day? I'd probably have to say it's going to be a seller's day today. Am I still going to hold on to this entry for the chances of a correction back up? Yes. If it hits stop loss, will I take this third trade? And I really haven't been trading that much, so I do have some ammo. All right, I really do have some ammo to put to work. So I will take that last entry. Okay. Make sure you have your pricing alerts so you're not stuck watching the charts. US 30 about to get a good 1 hour candle closure, and I'm also bullish engulfing on the 30. Dude, it's been giving us mixed signs all day. At this point, the market is just going to be clearing out a lot of liquidity from the past 3, 4, 5 days or weeks of just bullish action, people just winning, winning, winning. And it's going to try to make a lot of those buyers give that money back by forcing trades high into the trend. So I do want to be very mindful of that. I am putting in tester entries and I'm being very calculated about how many trades I'm taking. Okay, I said I'm going to take 3 trades total that equal the 1% of the risk that I'm trying to take, or like the 1% of the account, which is the total risk I want to take. So I risked 0.25% on the first one, 0.25% on this current trade that I'm in, but then I'll risk 0.5% on the bottom one, which will recoup with a 3-to-1 R with a bigger trade, and I'll make back ideally double or triple what I lost on both of those losses. If I take the full loss, it's just like I took a 1% loss. It is what it is. Do I utilize break evens? I do, but at this point, the strategy is getting to the point where the initial rejection is so fast and it goes straight to that first target that I'm able to snag above a 1-to-1 risk and reward if I have a good entry. And so I've just been getting out. But the rules of the system are close majority at TP1, but leave a runner. And then once you get the second pullback, obviously move stops to break even. That's a freebie for you guys if you were paying attention. Look into US 30, please. Already did. We already covered it. Drop a like and subscribe if you haven't already. This trade probably not working out, so I'm going to just get off the charts before I get too attached to these trades. You guys have all the levels. We've been covering this for an hour, basically beat this thing to death. We're good. If you have any questions, reach out to us on Discord. If you guys want to join the team or you guys are interested in the masterclass, FOMC 25. We'll see you guys bright and early tomorrow. Peace. All right, y'all. For the CA members, we are starting an affiliate